All right. So good afternoon. Welcome, everybody. Thank you so much for joining us. My name is Ian Large. I'm the Executive Vice President with Leger in the Consumer Insights Department and here in Toronto. And Shanze Khan is joining me, and she is the Senior Research Director in our Public Affairs and Communications group, also here in Toronto. So thank you so much for joining. So this is so welcome to the second in our series, Cracking the Newcomer Code 2024. If you didn't get a chance to see the webinar yesterday, the link is available on our website at www.legerweb360.com. And you're free to download the teaser report and to watch the recording of yesterday's webinar as well. So today we're going to go deeper into the results and talk about the Cracking the Newcomers Financial Code. That's a lot more detail in terms of where they're doing their banking and how they're feeling about their life in Canada and so on. But first of all, on the agenda today, Shanze will take us through some of the context and the methodology and the profile of our respondents. And I just want to note a moment to mention that this survey was conducted entirely on our Leo panel and is fully representative of the populations that we're talking about here. So there's the sampling is first class, the quality controls are first class. Everything is designed specifically to make sure that this is the most comprehensive look at newcomers in Canada. And at the same time, I want to pitch for our colleagues at Leger Digital, whose online and social media targeting tools mean that you'll be able to do research with these demographics specifically, the demographics that you've always wanted to but weren't ever really able to. So today we're talking at a very high level. So these insights we'll be showing you today are only the tip of the iceberg from our larger study. The final report for this will be ready in a few weeks, and if you would like more information, please feel free to reach out to any one of us, and we'll leave our contact information up at the end of this webinar for the last slide. So the final deck will be available in a couple of weeks, and it will be for sale, and it will give you more details as we go along. So finally, we'll leave some time at the end of this webinar for some questions. So please put these in the Q&A button at the bottom of your screen, and we'll be posting this. Mentioned as with yesterday, we'll be posting this webinar on our website later today, so you'll be able to see the report and download the copy of the webinar. And please feel free to share both the report and the webinar far and wide for any colleagues that weren't able to join us today. So with that, without further ado, I will ask Shanze to take us through the context and the methodology in the background.
Thank you so much, Ian. Okay, so just to level set a little bit, for anyone who watched our webinar yesterday, consider the next 10 minutes a bit of a refresh before we dive into some of the highlights from the financial portion of the study that we've recently completed among newcomers. Now, yesterday we painted a broad picture of immigration trends, why newcomers are vital to understand, and all the wide-ranging benefits of immigration. Today, we're going to be looking at it from a more specialized lens to understand what all of this means for banks, for insurance companies, and for financial services in general. I think one of the points that I believe is most often forgotten, but it's perhaps the most pivotal thing that we have learned from our research, is that newcomers are not homogenous. No two stories are the same. No two financial journeys are identical. When I came here 8 years ago, I mentioned this yesterday, I came here as a graduate student. It was a much more stable economic environment. My financial needs were quite different from someone like even my dad, who came here much later, or rather more recently, in a different economic climate with the aim of expanding his business here. So we have newcomers who are starting from scratch on one hand in this new country, while we have others who are transferring their established wealth from their country of origin to Canada. So the advice that they need, or the services that they will need, the services that will resonate with them, they're not going to be the same. Now, taking a look at this chart over here, what we see is a clear trend that immigration to Canada has been on a steady rise, and as we all know, and by 2021, it actually reached a point where 23% of our population was made up of immigrants, and which is our latest census. If you've been hearing the projections, you know that by 2041, immigrants are actually expected to make up a third of our population. Now, these are all people that are bringing with them a diversity in not just culture, but in financial needs and experiences. We see here that there are very ambitious immigration targets for the next few years. We're looking to welcome 485,000 new residents in 2024. This will be followed by 500,000 annually in subsequent years. But what's important to note here is that there is a very strong emphasis on the economic class of immigrants, and they make up actually 60% of the immigrants that are mentioned in these targets. What does that mean? That means skilled workers, that means entrepreneurs, that means professionals, all of whom are looking to set up their financial roots in this country. They're looking to invest in their future in this country. So these are people you can think of who will be ready to participate in the economy from the moment that they land. So they're going to be looking for services that can fulfill the needs of this, economically driven group, and met with a financial sector that sort of understands their aspirations. So let's dive a little bit deeper into who these newcomers are, where do they come from, what is their demographic makeup, because understanding their profile is really key to tailoring your services to see how their journey can be supported in the most impactful way. Without this, it's hard to really connect with the newcomer experience. Now, taking a look at the evolving origins of our immigrant population, we see this shift. What we see here is that the proportion of immigrants that is coming in from Europe is on the decline, whereas the proportion that is coming from Asia, including the Middle East, is actually on the rise, and it makes up the majority of immigrants right now. So each region comes with its own financial systems. It comes with its own financial practices and different expectations of what financial well-being really means. So it's going to be really important to create a financial environment that's welcoming and that's accessible to all newcomers from all of these different regions. So what have been your top 10 countries of origin in the past decade? We see India as number one. This is followed by Philippines, China, Syria. We see Pakistan, United States, Iran, Nigeria, France, and the UK. So we're talking about really different parts of the world. You could have a student that's coming in from Nigeria. You could have an entrepreneur that's coming in from Syria. And so really, the financial services that we offer will need to be as versatile as the people that are seeking them. At the end of the day, new immigrants are going to be making up a majority of new customers for banks. So let's take a look at a few of those demographic variables. These distinctions between newcomers and the general population, we really need to highlight them because they point to a changing demographic for the country overall. We know that the gender distribution, for example, for Canadians at large is pretty balanced. But what we see is that there is a slight female majority when it comes to newcomers. And then if you look at age, the difference is a lot more pronounced. It's not really subtle. We see that the majority of newcomers are under the age of 55. So we completely flip the proportions of our general population. And Ian's going to talk about this a little bit more, but there's also a significant difference in income. Now, we have newcomers with much lower median income compared to Canadians, and that's despite their significantly higher education levels. So there is currently a disconnect between what their educational background is versus the kind of jobs that they're able to secure versus the kind of the resulting income that they can gain. So financial services really need to be in a position that can help them bridge this gap to sort of help them overcome what I would assume would lead to a lot of financial anxiety. So what we can expect overall is this younger demographic, these ambitious individuals who actually, according to a lot of the research that we've done, are actually more digitally savvy as well. So they may be more inclined to use online banking or more innovative financial tools. but their priority really is to find solutions that fit their life stage, that can solidify their integration into Canada so that they can build their financial knowledge and understanding of what our local financial services and tools look like. We have to make sure we're using the right corresponding terminology, perhaps integrating multilingual chatbots, building financial knowledge programs. All of this needs to be taken into account when we think about tailoring our services for this group. Now, when it comes to our clients, we've been getting a lot of requests, whether that's a public affairs client, whether that's our financial clients, and especially in the last 2 years, what people want to see is an additional sample among this important group. They want insights on newcomers. We have companies like Pinterest who conducted a study with us last year. They wanted to understand what their role would be in the new Canadian settlement journey. We've done surveys related to insurance, related to entrepreneurship, where that newcomer analysis was really essential. Think about a housing study when you're thinking about first-time home ownership, when you're thinking about mortgages. It's essential to amplify the voice of new Canadians because they're going to really be overrepresented in these markets. I mean, home ownership, as Ian's going to talk about, is still a goal that the majority of new Canadians are still working towards. As opposed to general population where 6 in 10 Canadians already own a home. So we wanted to develop a study that would help crack that newcomer code and sort of understand what the challenges are and where the opportunities lie for the financial sector. Just taking you through our methodology before Ian dives into the results, we did a detailed survey of over 2,100 recent immigrants who arrived in the past 10 years. So it's a really robust foundation for our analysis. As Ian mentioned, our data was collected completely in-house with our Leo panel, which allows us to target these subpopulations. And data collection was completed quite recently by the end of Feb. Of course, we weighted all of our data to the 2021 census profile that we've been talking about that's available for this group and is particularly representative of those who arrived in the past 10 years. So we can make conclusions about this group at large. So I will hand it back to Ian to walk us through some of these results.
Thanks, Shanze. So that's the background. That's where we got here, how we got here. And as Shanze mentioned, there's a lot more information on this sample and the survey results in yesterday's webinar. But today we're just going to talk a little bit about the financial piece. And I said this is just the tip of the iceberg for the data that we've got to collect. So as Shanze mentioned, on the next slide, we're talking about their newcomers' financial profiles. So interesting here is that notice that 31% of newcomers from our study claim to own their own home, compared to 67% in the general population. And that's an interesting statistic because to some extent it flies in the face or counters the much of the narrative that the newcomers are coming and snapping up all the houses, and that's driving up the prices. So they are buying them, but they're not buying them at such a great rate. Although we see that 47%, so half of them, have not yet bought a home but plan to. So this is their measure, we believe, of financial security. Owning a home, living the dream, being established, place to raise their children, to work is the goal for homeowners, and they're actively working towards it. Interestingly, again, on that homeowner statistic, it only rises to 47% of people that have been here for 6 to 10 years in terms of home ownership. So it still doesn't get close to that 67% population. And it over-indexes slightly to Chinese immigrants, who also over-index to having been here a little bit longer, generally in our sample. But even for them, only 50% of them own homes. Although you'll see that the average incomes for the newcomers is significantly less, as the average household income is significantly less at $72,000 than the general population. The average value for the home is moderately or marginally larger, but the average income for the average size of their mortgage is significantly greater. And again, for the Chinese immigrants, we see that they have more, their houses are worth more, 894,000 in average, and they have a lower mortgages are close to sort of 300,000. So they are getting established, and they are becoming they're becoming fully integrated in this in the home ownership space. And then finally, on the average income, we see that the white immigrants tend to show the highest average income, and the lowest are from people from the Middle East, North Africa, and from West Asia. So those are things to note. There's a bit of an unbalanced unbalance in the way the incomes are distributed. So the next slide, we're talking about savings. So newcomers are really strong in the savings space. So 60% say they could cover unexpected expenses of $500 or more without borrowing or selling something. And this reflects their ambition to succeed professionally, personally, and financially here, because that's why they're here, as Shanze is talking about. 60+% of them are here as economic immigrants. They're here to grow and establish their financial lives. Interestingly, though, we see about a third of them consider themselves to be quite or very indebted. So there's a lot of pressure on them to succeed and to stay out of debt. And in terms of the note, in terms of the 60% who could cover the unexpected expense, on average, according to Statistics Canada, 74% of Canadians overall say they can cover that amount. So there is, again, this disconnect as they're getting themselves established. But they are saving at a fairly significant rate, $300 on average per person, which is significantly more than the average Canadian, who I think StatsCan tells us saves about $75 per month. Now, given the age profile that StatsCan is working from, there's retired people and older people who aren't saving anything, so that's going to skew the average. But at $300 a month, it's pretty. It's the path to financial independence, and they're working very hard at it. Finally, 6 in 10 are remitting funds back to their country of origin on a regular basis, so that's at least annually, and this significantly over-indexed to immigrants from the Philippines, where we see 80+% of them are remitting funds back to their home country. Next, we asked newcomers about their financial relationships, and we asked them about their main financial institution. So with 2,100 interviews, we've got the whole gamut, the whole spread of FIs that the newcomers are using, and this is about what you'd expect in terms of the distribution. With RBC tends to be the largest provider of financial services, so they're going to be at the top, and then the smaller fintechs closer to the bottom. What's interesting is that the banks, the big five anyway, index a little differently with the different ethnic groups. So RBC is over-indexed among Black newcomers, whereas TD is over-indexing with Southeast Asian newcomers. CIBC is over-indexing to Chinese newcomers, and Bank of Nova Scotia or Scotiabank with Southeast Asian and South Asian. And finally, the Bank of Montreal is over-indexing a little bit, measurably, but a little bit with Latin American immigrants. So clearly, if there are targeting strategies that they seem to be working for these banks, that they're growing their business with these newcomers, representing, as Shanze said, 500,000 newcomers arriving every year. That's a big pool. That's a lot of money. That's a lot of relationships that need to be built one at a time. And this is a huge opportunity to grow for not only the main banks to grow, but I think also for the fintechs, because newcomers come with different experiences with online banking or different experience with fintechs. They come tend to be more tech savvy. They tend to have more 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 apps on their phone, and they tend to be used to working that way. So for the fintechs, there is a great opportunity here for them to grow in this space and to be attractive to these newcomers. The final report, we have enough sample that we can slice and dice it by the main bank, certainly, and we'll detail much more detail in terms of the discussions about the various financial institutions. So we asked then about what banking products they own, what banking services or accounts do they currently have. So obviously, credit cards, checking accounts, savings accounts are the top ones, and that's what you would expect. Those are the first things that you would open. In the webinar yesterday, we talked about how soon newcomers open bank accounts, and it's one of the very first things that they do. They arrive, they open a bank account, and then they start to get themselves established financially. So this is a real priority for them. Interestingly, on average, however, we see that newcomers only have about 4 financial products. Now, recognizing that we're running the gamut from people that have been here for literally a few months through people that have been here for almost 10 years, but 4 means that the stickiness of the financial institutions is quite low, where we're seeing that if you're only moving 4 products, and I believe, and I've used this quote for decades, I believe the president of RBC once said, it's easier to change your spouse than it is to change your bank. So I think if you've only got 4 products to move, that's not the case. That's quite easy to move those banks around. And we see that a quarter of them already have foreign investments, also have foreign investments. So obviously within the banking regulations available to you, there are opportunities to grow this money. The number of products, not surprisingly, grows with the tenure and the age and the time in the country, but there is just because you secure their first account with them doesn't mean you'll secure all of the business with them. And for established Canadians, I'm a perfect example. I opened my first my first bank account 45 years ago with the bank that I kept my paper route money in, and I'm still with that bank. And it's probably the same bank my parents were with, but that is not the same anymore. So we're seeing that there are that the overall satisfaction with the financial institutions is not that strong. At 45% being somewhat satisfied and only 22% being very satisfied, that stickiness is a problem. And we asked them specifically, how likely are you to switch your main bank and your main financial institution? And 25% are saying they're likely to leave within 6 months. So that's a problem for these financial institutions. They have to design products and relationships that will keep the tenure, or keep these newcomers as customers, recognizing that today, when they first arrive, they're not worth a lot of money. Their incomes are lower than average. Their education is significantly higher than average. So it's about the long-term view with these newcomers, that their goal is to establish themselves. Now, not surprisingly, again, that satisfaction increases with age and with tenure and the length of time in Canada, so that's not surprising. So the stickiness does develop over time, but with 500,000 new customers every year, I think for the banks and the financial institutions, you want to get those newcomers soon, and you want to get them for life. Okay. So we asked specifically, well, why did you choose that, or what are the reasons for choosing your financial institution? Which factors are most important? So recommendations from friends and family, top of the list, and this is significantly higher on the list for the newest newcomers. So the people that have arrived in less than 2 years are looking for their community, they're looking for their friends and family, they're looking for their colleagues, they're looking for the recommendations, because they don't know. They don't know what's available. They don't know what the difference is between the FIs. They don't know why they should choose one or the other. The next that we've highlighted as critical are the tailored services offered for newcomers. Again, this to some extent decreases with age and decreases with tenure, which is again not surprising because that newcomer they become less newcomers as the longer they get established here. But nonetheless, 19% of the reasons why, or the factors that are important to them, are for specifically for tailored services, and that's is a challenge for many of the financial institutions to create those services. And as Shanze suggested, something as simple as a multilingual chatbot might be the kind of thing that they're looking for. And then finally, we've highlighted as the international locations or services. Again, this is most important for the folks that have been here for 2 to 3 years. The longer that they've been here, the less they're interested in that. But when you see that 6 in 10 are remitting funds back back to their home country, obviously international locations and services is something that's important for them. Okay. So, all right. So what were the challenges when accessing financial services? And this is an interesting generally, because newcomers, we know, face a lot of challenges professionally, personally, and financially. And the challenges that they're particularly heartfelt in establishing credit, understanding the banking terms and processes. If you've just arrived from a country that doesn't have a TFSA or you don't know what an RSP is, how do you learn those things? How do those things become common knowledge among the newcomers when they arrive? And these are obviously things that we want them to establish. These challenges are also felt, and we talk about this in much more detail in the final report, in terms of job search. So not only are they establishing a credit history, they also have to establish a work history or references. So these things are the easier that the financial institutions can make it for newcomers to get established and to be welcomed, the faster that they can lessen the barriers, and the sooner that the newcomers will become loyal customers, and then B, as we saw from the previous slide, tell other people about it. That's critical for the banks. So we asked quickly, well, what other additional services would newcomers would find helpful? Newcomer specific financial products or services, very top of the list. Assistance with building a credit history, understanding financial literacy, personalized financial counseling or advice. And we have a significant number of newcomers who have independent investments and investment advisors, or are investing through their financial institutions. So that kind of advice, personalized financial counseling or advice, is a real need for these people. What's the size of the prize, though? Half of newcomers tell us that they would switch financial institutions for an institution that offered services or featured tailored to immigrants. So not only do they have the relatively few products with their current FIs, they're willing to change those for the right FI and the ones that speaks to it. So the size of the prize is huge when you're talking about 500,000 new immigrants every year. Okay. So lastly, we touched on insurance. So we asked some very specific questions about insurance, and we see here, because insurance is one of those things that's I think it's uniquely Canadian. There's long since there have been lots of statistics about Canadians are overinsured, or they have more insurance than average around the rest of the world. So this is a really important opportunity. And the insurance sector in Canada, of course, and we have a number of people on the call today from the insurance sector. This is a big sector. This is an important driver of the economy in Canada. So getting a hold of these customers as they arrive is really important. So not surprisingly, or maybe it is surprisingly, there's a lot of room for education and communications, where you only have 1 in 10 who would be very familiar with the variety of options available, and only 41% who say they're somewhat familiar, so less than half. So there's a huge opportunity. Again, talking about financial literacy, the insurance sector has a wide variety of products and services that are on offer to Canadians and to newcomers. And so there is a really great chance to talk to them and to explain to them what insurance does, why they would need it, and most importantly, to assess whether they have enough. So the again, the building the financial security has to be tied to the insurance, their insurance coverage. And if they're not aware of that, or they don't understand why that's important, then there's a really great opportunity to grow the sector and to increase the penetration. So you can see they've got a good mix of products: automobile insurance, extended health, life insurance. And we go into a lot of detail about where they're getting these products from, in terms of through their employers or through independent advisors. So there's a great deal of detail in the report on this section, which I won't go into right away. But there's lots of room to grow, and there's a lot of channels in which to do it. The insurance sector is extremely good at reaching Canadians where they're required or where they need it. So there is an opportunity still to increase the need to increase insurance coverage, or to make sure that newcomers have the right insurance cover, because they don't know. When we asked the last question, when we asked them about their attitudes towards it, so 62% say it's too or 82%, excuse me, say it's too expensive. I would worry how I would pay my bills if I got seriously ill or disabled. I don't know how much insurance I need to have. These are very basic questions that newcomers need to have answered, and it's the insurance company the insurance companies, or the insurance industry are the ones that can answer these questions. But now the challenge for newcomers is, do they have these relationships, or do they have these pre-existing relationships? And again, although we didn't specifically ask about for insurance, we know that recommendations and word of mouth and products tailored to them would be absolutely critical at securing their business and securing their business on the long term. So there's a lot to cover there, and as I said, there's a lot of data in the final report. We talk about a lot of questions, but I just want to sort of summarize a few key takeaways. And we'll be ready with the final report in a few weeks. So, despite all the headwinds that they are facing when establishing credit to finding a job, newcomers are making progress. They really are here to grow, and they are growing at a great rate. There are opportunities for other players other than just the regular banks, if you like, or the main banks. There's an opportunity for leading financial institutions, because the leading financial institutions have not established the depth of the relationship. But to keep the switching behavior low, so that's really opening the door to unconventional players. We think the opportunity for fintechs here is huge, and if they get the right mix and the right languaging, then they will win. They can win big. They obviously, newcomers face serious challenges when establishing their financial lives, from proving their identity to establishing credit. These are unique to newcomers, and the FIs have to understand that, and they have to be able to make sure that they are speaking the language that not just the language, but they're speaking in terms that newcomers understand. And finally, they need to create better newcomer-specific products. And this is tricky because the barriers to entry for other FIs is very low. And we see this when we look at across the spectrum of certainly of the big five, the banks, the products and services they offer to newcomers. There is a great deal of commonality between them. They get free credit cards. They get no-fee banking. They get to establish some establishment of credit. And each of the banks, I mean, if you look at them, you line them up side by side, they almost all have the same words in them in terms of the service offerings. So bank number one or FI number one creates a product. By the end of the week, the second, it's relatively easy to copy it. So the opportunity to be unique and to be different is essential, or the requirement to be unique and different, just so that the newcomers themselves can make the decision easier for them. And then finally, there are unprecedented opportunities in the insurance sector. the understanding of and ownership of the range of products is very low, and there's a huge opportunity for providers with the right communication and approach to and education to succeed. So that is, as I said, there will be more coming out in a few weeks, and some of the topics we're covering in terms of the challenges and support, the settlement experience, the multiculturalism versus the melting pot. Great deal on personal finances, their net worth, where their mortgages are, how much they have, where their investments are, how much they have, banking, insurance products, services, and attitudes. Lots about using financial advisors, lots of information about how they're relating with their financial institutions and the kinds of things that they need. And then most importantly, because the sample is large enough at 2,100 plus interviews, and B, appropriately representative. There's no reverse sampling here. There's no open link. These people were all qualified, and we know who they are, and they are representative of the populations that we say they are. So lots of great detail in terms of demographic analysis by question. Likewise, we're happy to chat with you about custom research. And as I mentioned before, we're happy to do other work in this newcomer space, and we're happy to talk to. Please reach out to solutions@leger360.com if you want some more information about this report, or to Shanze or me or anybody else who you happen to know at Leger. We'll be happy to direct you to the report. So with that, we open there. We have some questions, and I'll let Shanze. You want to field the questions?
Absolutely. Okay. So we have a couple over here. One person asked, do we know the immigration status breakdown, example, PR, work permit, and study visa? I can give a quick answer to that. We do, and it is available in this study. It is one of the first questions that we ask. We will be able to cross all of their answers by their immigration status, but of course, based on how common each immigration status is, that's what you would see as the incidence in our sample as well. Permanent residents and citizens will obviously make up more of the sample than a work permit or temporary permit, something such as that. Ian, are you able to take this question on, are there any insights around if they are switching or their loyalty to their first FI once in Canada?
Not specifically. We know that that one of the very first things they do is establish a relationship with an FI and open a bank account. We don't know the extent to which they have switched, particularly the older demographic who have been in Canada longer. But that's certainly something that we could research at another time.
Okay. We have one question asking, can you share any numbers that show that newcomers are more tech savvy? Do you know if we have something publicly available? I know that we've done a lot of research that has showed this, but
we'll have to canvass our colleagues to see what they have that's publicly available.
Yeah, for sure. Well, we can look into that and we will get back to you. But yeah, it is something that in terms of, I think actually even in our Leger digital study, we perhaps had that cut, but I will look into it and get back to you. That they have higher rates of social media usage. They're just more online. They have more apps on their phone. It's all things that have come out of our studies. And we have another question.
Shanze, just one more close on that. So we know that they're significantly younger, the newcomers arriving. So they're by the vast majority of them under the age of 55. So it sort of stands to reason that they are arriving and are more tech savvy. So it would be surprising if they weren't, would be the way I would interpret the answer. Sorry.
Yeah, for sure. The demographic makeup is driving that for sure. Okay, so for you, Ian, are there any insights into the reasons and or driving factors that make them pick their financial institution?
Well, recommendations obviously come top of mind. So when they arrive, and those recommendations may come if they're coming as students. It may come from their school or their educational institution. often we know that many have established their banking relationships before they've arrived in Canada, and we presented those data yesterday. So there is, to a large extent, it's a Google search is probably where they go first, or if they have friends or relatives here or employers here, and they need to establish that. So that's really what's going to drive them to the first stop. And then once they get themselves established, and once they start to need more products and services, then they will start to shop around, I think, more actively.
Perfect. So we have one interesting question on home ownership aspirations in different cities. So do you find any measurable difference in attitudes of newcomers in the large three, Vancouver, Toronto, Montreal, and the other smaller cities such as Calgary, Winnipeg, London, or Halifax?
We'll have to get back to you on that one. We haven't chopped the data up quite like that. Recognizing that most newcomers arrive and move to large urban centers anyway, which is why certainly why their aspirations, they're not realizing their aspirations for home ownership quite as quickly as maybe they would like to. But we can sort the data by postal code and get back with us. So please send us that question directly.
Perfect. We have a question asking any related studies on newcomers and their trust in new governments, federal, provincial, municipal, and on that there will be more to come, and maybe not answered by this study, but we will be sharing more information on that in the coming weeks. Are there any insights on their approach to investing? Do they prefer to do it themselves, or do they rely on an advisor?
So there's about a third. So about a third will use their financial institution's advisor, so the Dominion Securities or their local one. A third will use an independent, and about a third will do it themselves. So it's an interesting split that because they are, many of them, as Shanze was alluding to at the beginning, are very sophisticated business people. When they're arriving here, they're moving their lives. They may well come with a pre-baked in understanding and knowledge of and comfort with doing their own financial investing. So we do have that. We do have the data by that, and that will make sure that's included in the full report.
Perfect. We have a question on how many of the respondents had arrived in the last 5 years, and did the study only include newcomers who had arrived independently as adults themselves? So just to answer that question, I believe a majority of our sample, again, in line with immigration rates, had arrived in the last 5 years, but we still had a sizable sample of those who arrived in the last 6 to 10 years, so we're able to break it up with both. And no, it does not include only those who have arrived independently. They could have immigrated with their family. That was not a part of the qualification criteria. One last question I see here on, do we know how many banks newcomers are banking with on average? Are they using different banks for different needs? Looking to know more about their loyalty.
So we only asked main financial institution. We didn't ask other banks. So anecdotally, I will tell you that they are likely banking with multiple banks, particularly as their banking needs get more and more sophisticated, or they're looking for different products. But the data we did not, we asked just in this survey just what their main FI was.
Yeah. And finally, people want to know if the report is viewable by province. And the answer to that question, I think we've got multiple questions. We do have enough sample in the different provinces that we would be able to get the data as needed. I believe that answers most of them. So,
all right. Well, thank you so much to everybody. Thank you for attending today. It was great to see so many people on the call, and I hope that you found the information useful and helpful for you. So please reach out if you have any other questions, or reach out to either the solutions at Leger 360 or to any one of us at Leger if you want more information on the final report, which will be ready, as I said, in a few weeks, and it will be it will combine the learning and the insights from yesterday's webinar as well as the ones from today. So it's the full Monty, as they say. So on behalf of Leger and on behalf of our teams here in Toronto particularly, I would like to say thank you very much for attending, and have a wonderful day. And I look forward to hearing from you and working with you sometime soon. Thank you so much.